Today, we'll be covering a space stock that I am most excited about, MDA Space. What sets them apart is they have three segments that serves nearly every sector of the expanded space economy. Their first segment is their largest, making up 2/3 of their revenue, and that is satellite systems. They manufacture essential components like antennas and control systems that they sell to other satellite builders. But their big moneymaker is selling a full satellite system called MDA Aurora. This software-centric plug-and-play offering allows customers like EchoStar and Telesat to support rapid deployments of direct-to-device and 5G network offerings. Their second segment is what excites me the most, and this makes up 21% of revenue today. And this is Robotics and Space Operations. These are the devices that astronauts use while on spacewalks or during rover missions. The NASA Artemis mission with Intuitive Machines should accelerate revenue for this segment that has already supported greater than 100 space shuttle missions. The last segment is Geo-intelligence, which is essentially what Planet Labs does, and that is imaging the Earth from space to provide data insights. I do think Planet Labs is a leader in this space, but if this industry takes off as expected, a rising tide lifts all boats, so not bad for a third segment that MDA has exposure to. Besides this broad exposure to the space economy, what excites me most about MDA is their financial profile. MDA isn't some new pre-profitable startup that has been doing this for over 55 years, has already proven profitable. Their revenue has grown at a CAGR of 32% a year from 2020 to expected 2025 close. During this time, net income has grown from negative $23 million to expected $120 million for 2025. For this profitable growth with exposure to almost all areas of the space economy, it only trades today at roughly a PE of 25. The future also looks bright for MDA with a $4.4 billion backlog, which would be over 2 years at today's revenue run rate. Most recent news is that MDA has been awarded contracts by the Missile Defense Agency, SHIELD, that opens up eligibility for the desired $175 billion Golden Dome initiative. Narrative-wise, there's lots to be excited about on MDA Space, but let's run our 2030 Bull Case Valuation model to see how the numbers look. From a revenue perspective, I believe they can get to a $4.2 billion revenue run rate by 2030, a 21% CAGR from today's numbers. This is slower than the 32% CAGR they had the last 5 years, as their business is already quite big at $1.6 billion. Their satellites division, though, through Aurora Satellite System, I believe can capture 3 to 4 more mega constellation deals by 2028, which would fill up their capacity for 2030. I am optimistic on this, as with the upcoming success of AST's direct network, more and more companies will need to upgrade their satellites to compete, which MDA can supply the technology to them. The robotics and geo-intelligence segments will grow at a slower 15% CAGR, but can provide high-margin recurring revenue to supplement the one-off satellite deals. For an adjusted net income margin, they are today around 10%. I believe this can expand to 13%, as with higher satellite output from their Montreal factory, there's more units to spread the fixed costs against so they can gain operating leverage. Their new Aurora satellite is software-defined, so should have lower cost to produce and allow MDA to sell high-value functionality via code instead of hardware. For a PE ratio, I give them the 25 they are at now. This is deserved, as its profitable growth at 21% annually should deserve a premium PEG ratio of 1.25. The reason it's not higher, though, as it would be discounted due to being a Canadian-listed company that currently only trades on the US exchange via the OTC markets. Putting all this together gives us a bull case market cap of $13.6 billion in Canadian dollars, or roughly $10 billion in US dollars. Over 3x returns from today's stock price in a bull case, which is pretty solid upside. So let's run this through mine and John's framework to determine if we will want to buy. Before we do, please read the disclaimer in the notes below. We are not financial advisors, and anything we say should not be considered financial advice. Also, if you like content like this, please help us out and click a like and subscribe to follow us as we analyze the most innovative companies twice per week. Now let's run MDA Space through my 5-point framework. From a leadership perspective, I give MDA Space a strong. Their CEO, Mike Greenlee, has been in charge since 2018 and has over 30 years' experience in the defense, space, and security industries. Under his leadership, MDA has doubled its revenue and workforce and pivoted the company to their big moneymaker, the software-defined Aurora Satellite. This company is a good example for how quickly these space companies can scale their profits, and they've captured quite the backlog across each of their 3 segments. I love that he has MDA support virtually all aspects of the space economy outside of launch. For valuation, I give this a strong. In a bull case scenario, I want 15 to 20% annual returns to give myself a margin of safety, which MDA easily surpasses. I do have confidence they get close to the bull case, as the key variable here is continuing to grow in revenue. With their satellite segment transitioning from being a component supplier to a prime contractor, meaning they build and integrate entire satellite systems, it has allowed that backlog to explode the past 2 years, which I expect should continue. AST SpaceMobile will prove the value of connecting phones direct to satellites to eliminate dead zones, and I assume that competitors will be racing to buy MDA satellites to be able to upgrade their own aging satellite fleets. For revenue and profit growth, I give this a very strong. They achieved 32% revenue CAGR these past 5 years, which I suspect they can continue to grow very fast for at least 20% the next 5 years, which is still very good as they become much larger. Most importantly, they're GAAP profitable today despite spending tons on R&D for the MDA Aurora satellite and on CapEx for their Montreal factory to scale production capacity for this satellite to 2 per day. For total addressable market, I give them a very strong. They today only have around $1.6 billion in sales, but have a 5-year pipeline targeting around $20 billion in sales. Most importantly, as a pure-play manufacturer and partner, their total addressable market is essentially the entirety of everyone else's ambition to get into space, which by 2035 is expected to be over $1 trillion. Lastly, for secular tailwinds, I give them a very strong. They benefit from the trifecta of tailwinds of global defense and sovereign security surge, the commercialization of the moon, and the commercialization of AST's no dead zone connectivity. Overall, I'm a yes for MDA Space and plan to buy a starter 1/3 position. I love how broad their offerings are across the space economy and that they have double-digit revenue growth while also being profitable. Narrative-wise, there's tons of positive catalysts in each of their 3 segments that can propel the stock as well. What do you think, John, as you review MDA through your technicals framework?
Thank you, Scott, for that excellent presentation and analysis of MDA Space Limited. So for company fundamentals, it has no dividend. I couldn't find a beta on this one. The market cap is 3 billion, around 3 billion, and earnings comes out March 6th. So that's a neutral. For earnings history, the past 4 quarters, it's beat all 4 quarters. So that's a positive. For company financials, the net profit margin is 10%. Debt to equity is 30%. So that's a neutral. Now for my favorite part, the technicals, the moving average, the 200-day moving average is sloping positive, a little positive. And the 50-day is below the 200-day, which isn't good. And the price is above both the 50-day and 200-day. The Bollinger Bands are very wide. The volatility is very wide. So that means the volatility is wide. Like I said, it's a lot of volatility. And it's above the upper band for the past couple of days, which is extremely unusual. And it's been hugging the upper band for the last month or so. So stochastic oscillator is 96, which is extremely high. Usually it's overbought between 80 and 100, and I don't think I've seen a 96 before for a stochastic oscillator that high. and the lines have intersected. They just intersected, so that is in the price in the short term. The price could go down in the short term. The MACD is positive, and the unbalanced volume is positive. So that's a neutral to negative because of the hugging the upper bands, penetrating the upper bands. Like I said, that's extremely rare. For 2 to 3 trading days, it's been above the upper band. And that only happens, like I said, 5 of 100 trading days. Does it penetrate the upper band? And as I said, the slow stochastic oscillator being 96, that's really high. So for the analysts that I cover, there's one sell, one hold, 5 buys, and one of the analysts said it could go to 30. So Scott, the company is really good. It's a Canadian company, and with the administration, you never know if there's going to be an issue between Canada and the U.S. So that's one negative thing about it, competition as well. But I like the business, like the company, but the price is a little overextended right now. So maybe if it can go down to go down to a lower price in short term, then maybe we can revisit it. But I don't really have a price target for right now to go down. So back to you, Scott.
Thanks, Dad. In order to add to our community portfolio, we both need to be a yes. I am a yes, since love how broad their offering is for the space economy and their track record of profitable growth. John, however, is a no, since technicals wise, space stocks as a whole have detracted from fundamentals and technicals in a period of euphoric FOMO. However, MDA Space right now is our number one space stock that we've covered, so we'll be closely monitoring and adding as soon as John feels better on the technical supported price. With that said, thank you for watching. Please click a like and subscribe to follow us as we analyze most innovative companies twice per week. Until next time, happy investing.